You're listening to the Wired for Impact podcast.
Since we have a little bit more time, I'd love to get your specifics on a crypto strategy, because all of this is pointing towards blockchain technologies. We're anticipating some type of collapse in currency, in the dollar currency, and or some type of significant trauma to the system to where we're going to have to, they're going to want to push everything digital. Tokenization, as you mentioned, and probably universal central bank digital currencies. It's the strategy here to navigate that from a crypto perspective, blockchain perspective.
So crypto, in my opinion, since 2016 was created to serve as the alternative by the same people. So I want to introduce a new system. So don't moralize about it. I mean, I can explain my view, do short form because I've been answering very long form, but essentially, there's an old donkey that's massive, that's got a quadrillion of weight on its back, couple of quadrillion, in fact, and it's dying. And that's the debt system of where we are now. So simple metaphors for everyone to follow. And they brought up a new, smaller, but very fit and healthy Tonto, the Lone Ranger's white pony, as the alternative system. Or if you want a different metaphor, you've got the old iron horse train. I used to watch an American horse with characters. I'm probably giving my age away. Many of you won't know. And that's the old system, and it's running into one of those end of rail moments. It's falling off the cliff, the oh crap, there it goes. And there's a monorail, which is this brand new slick system. So crypto is the monorail. And before you can kill the new, you already have to have created and birthed the alternative. So you are now in the parallel running stage of an old system that's dying, but still has to function for now, while inflating up the new system. So the smaller horse has to grow big, 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 so you can now carry the quadrillion load, because these guys don't want to lose their net worth. They are quadrillionaires, trillionaires in terms of what they own, if you were to count it. But money's not their goal. They have absolute control. They print the money. It's almost like Smarties. If you own a Smarties factory, you don't count. You don't care how many you have. It becomes academic beyond a certain point. It's the power. And it's the control. So it's all about power and control. So as they are tapering the one system, and then it'll go into collapse, they will say, crisis for a while, problem, ATMs closed, go dark, can't draw more than $20 out of its machine, bang money, hacked, missing. Who knows? Nobody knows how it happened. Funny narrative, like Osama bin Laden, like how that happened on 9/11. Then a narrative, a misdirect. But nonetheless, you then will be arched. You want to arch over to the new system, and you have to participate to some degree in it. So as much as it's their system. So get the upside of the inflation of the new system by being early. So I am in Bitcoin. I am in and trading Ethereum. I had a wonderful week last week with longs on Bitcoin, and it worked really, really well for us. And gold triggered that. It's an anti-fiat that gave permission. It's a lack of confidence in dollar and debt. Remember the and debt bit for the reasons I've explained, because you don't have a dollar without the debt. It is T-bill accounting. Every time someone talks of money, there's liability and asset. Like a mortgage is a debt instrument. You borrowed money and you bought an asset, and you owe money. Well, I should say currency, but gold doesn't have that. But so you want to buy gold, you want to keep cash, and you want to carry as many of your assets over, and you want to have physical assets now. As they're pushing digitally, you want to have physical assets. I am intentionally buying property, not buying property to be a big Airbnb, rich dad, poor dad type thing. I've got no debt on it. Why? Because I've warned you about debt devaluation down, rates up. For example, property, I'm buying cash property, but I accept that it may go down. But after it's gone down, it's going to continue to hold value because it has lifestyle value to me. I want to live in it. It's got all the things I want. It's got great proximity, great little community, lots of independent stores, no chains, no McDonald's, no Wendy's, whatever, and all of that. So buy things, but recognize that if you're in a country like the States where there's hyper leverage on vehicles and property, those things are going to go down. Vehicles are not an appreciating asset unless you're in very specialist cars. But property will crash because too many people are reliant on assets. And what's happening? for the debt to continue devaluing because they're issuing new surplus, the rates go up rather than down. But it won't be because Jay says, this is a really strong economy, I want to increase rates. It will be, hey, there's a financial crisis, we're left with no other option. The markets aren't buying, the debt markets have a rate spike. Britain raised during the George Soros crisis. Most of the things I'm talking about there already exists a microcosm case study for this. And in Britain, when George Soros sorted the pound, because it came in too high against the Deutschmark, that was the setup, took billions out of the British public because they protected the currency with taxpayers' money. So there was a transfer of money to Soros that now runs the Open Society for that trade and his quantum fund. And it was billions at that time, which is now tens of 20s of billions. And what happened is in one day, British England came out and raised interest rates twice in the same day. So they didn't raise it enough to stop the collapse in the bond market because no one was buying the bond and the currency collapses with it. Remember, the pound is borrowed into existence. No one wants the debt instruments. When they sell the debt instrument, they're also selling the pound. I'm selling a £1 million bond instrument. I want to get into dollars. This is not going well. The pound is devaluing and the debt market is collapsing. What happens? Debt market collapse, rate rise. Here they came out and raised twice. Do you think they were saying the economy is super strong, we need to raise rates? And they raise it in the morning and they go, you know what? It's really, really, really strong. I've just got something new. Well, let's go out in the afternoon and raise rates again. No, they were forced to raise rates. This was the point I was making. The central banks don't control that. The markets do. And the market said, we don't want your debt and we don't want your pound. And of course, George Soros was borrowing and shorting and helping it on its way down, and they couldn't hold it up. It was too big an attack. They didn't have the resources. They were too high, and they had to come out of the ERM, which was what it was known as, the monetary system, the European exchange monetary system at the time. So you've already had that, and you're going to possibly face a rate spike. So to all you entrepreneurs, look at me now. I'm trying to help you. You have to be prepared for a rate spike. Credit card balances, if it's, and some of you might be on fixed deals, that's better. But remember, in a force majeure, you need to know your terms and conditions in a bank. I'd just sooner not have debt, because that's how you can reduce the bulk of the middle class and the working classes of America to serfdom and welfare of the American state. Simply by saying, interest rates now go to 10, 15% in a mega spike. How many people are going to have to put their houses in the market? How many people will be throwing the keys back at the bank? Guess who'll be there buying? Vanguard, BlackRock, with a bottomless overdraft, kind of like Bezos had, that garage Amazon that could just run without making any profits for the better part of 20 years. And build super server farms, and they just kept raising capital, and everyone just kept believing in them. The bottomless overdraft. I love the stories of the bottomless overdraft to build mega corps that dominate and crush all competition with this unbelievable access to capital that never stops coming, this money funnel that just comes, right into your backside. You got notes coming out of your ears. You can build a business and dominate so much. Look, it still takes skill. I'm not going to deride that, but money fixes a lot of problems. You get the best guys in everything. Most of us don't get to start a business in that fashion, that level. So you've got to get out of debt. Then you've got to own physical things. Get gold and silver and have it also stored in different countries and different jurisdictions. You need the arbitrage of different legal systems, different legal structures, not just in your own personal name, remember, because they use the tools they use. Tony Blair, foundation. Bill Clinton, foundation. The Rockefeller, foundation. Guess what I have? Foundations. Why? Because they're written up to give max protection to people's assets. And you can go cross-country, you can be in different languages, different legal systems. That becomes a hell of a pain in the ass for them. Remember, they're also going to go for the low-hanging fruits. Most people, their cars in their name, their homes in their name, and they've got big mortgages on them and finance on them. Well, those guys get to die, I'm afraid, on an interest rate spike. Even if you have a fixed term deal, they might wiggle. The bank might say, we can't honor your fixed. You either have to settle the mortgage or you're going to revert variable. What can you do? What can you do? So don't think I've got this, I've got a clause. Anything that's written and in contractual. These people are specialists at not standing on agreement. Bankers are specialists at taking the umbrella away when the rain comes. This is all part of their game. You think you're safe because you signed a deal. It's not worth the paper it's written on. There's a great American that I interviewed on our YouTube channel, and I've just peed. I'm so bad on the name side. He's awesome. The rule of law in terms of America right now is in absolute collapse. He's highlighting this facts continually. And he's doing great work. I owe it to you to tell you the name. You can superimpose it in the print. We interviewed him. He's fabulous. And he's right there in America. He's a trained practice lawyer, and he is looking at this specific aspect of legal protection. You have shares. If you don't hold the share certificates, your brokers can wash out and take your shares for you. You know, we've all so used to digitization of everything. You're going to find out about digital and what it means. Factual deception downs, mobile network downs, internet downs, all of these various aspects. Got to learn to laugh, boys. It's like a ridiculous situation. It's a game. It's a game. You're going to have another life somewhere in another soul and another body. Don't get too morbed out by this.
Thank you for listening to this episode of Wired for Impact. If you're interested in creating and expanding your impact, be sure to visit us online at impactnow.com.